Hello, everyone, and welcome back to part 3 of Market Structure series from Trading Academy, presented by yours truly, Unitrader. Before we get started, a quick disclaimer. Please, this is for educational purposes only. It is not financial advice. Do not trade if you do not understand what you are doing. Participate only after you educate. All right. Today, we're going to be looking at order blocks. Very big topic, a lot to know, but people tend to complicate this. So we're going to go over some of the complication, then we're going to try to demystify it and, make it as simple as possible, because that's really the key to being effective, is to keep things simple. So an order block, you'll find different definitions for them, but it's generally considered a specific price area, so a zone, where large market participants, such as institutional traders, have previously placed significant buy or sell orders. So we're looking for a change in price action which aggressively moves, all right? You'll hear it referred to as delivery, a change in delivery. It's just a change in price action, all right? So we want aggression. It must create a fair value gap, and it must create a break of structure or a change of character without a pullback candle. Now, it's a little bit different on some of the variation blocks, which we'll get into in a minute, but that is what the order block is. So what does that look like? You see here we have a high put in here, and then price comes down, and then we get this nice push away, which looks pretty aggressive. So there's our aggressive movement away from a zone. Now what you would hope to be finding was that price had reacted off of something down here, whether it was some sort of liquidity sweep or a support and resistance zone, some sort of market structure that it had reacted off of, all right? So now that we have this aggressive movement, we look to check if we've got our key factors to validate this order block. It has created a fair value gap here. If you don't know what a fair value gap is, check out video number 2 of market structure, fair value gaps. And not only has it created a fair value gap, but it's also broken that recent high, so we've got a break of structure. Once we have these 3 elements in place, we can look to the low and find our order block. So for the most part, people tend to mark out the previous candle before the move. All right, so in this case, this is a bullish order block, because if price comes back down here, we would be looking to see the reaction to see if it holds. So you would mark out the last bearish candle before this move takes off, all right? One thing that you have to note here as well is that there is no pullback on these candles here, all right? It just goes straight up and breaks that structure here. There are other ways to mark out order blocks. There's variations on how to do everything. We'll go over a couple of them. We'll look at that on the charts, which we'll get to in a minute. Before we do, let's just see what we would be then looking for is price to come down into the order block and for it to hold. All right, so we're not going to trade these just randomly. We're going to use more confluence, more ideas, and don't just trade off of one idea. It's a very bad thing to do for the most part. Okay, so there are some variants, like I said. The variants we'll be covering are, which is pretty much all of them, are breaker blocks, rejection blocks, which are pretty much just equal highs or equal lows. So you're going to have price rejecting from a zone formed by candle wicks as opposed to a candle body. Personally, I don't call those rejection blocks, but I just call them highs and lows, really. But order block, you'll notice that order block traders tend to call everything order blocks. Supply and demand traders would call it something else, right? They'd call it a supply or a demand zone. So it's kind of it's just the way trading goes. Then we have propulsion blocks, which I really do like. They're fantastic to use. And then we have vacuum blocks, which are price gaps. They're just gaps, all right? So in the old days, we used to call them price value gaps, also known as fair value gaps. So for example, in the overnight market, price gaps up, we call that a gap. Order block traders call them vacuum blocks. All right, so let's head on the charts and we'll find examples of all of these and see how we can utilize them. So starting off on the Bitcoin 4-hour chart, we have a very nice order block here, and I've chosen this one just to go over a couple of things here. The old school traders, they would refer to order blocks more as support and resistance sort of zones, all right? So places where they knew that they were going to encounter pending orders, sitting orders, that sort of stuff. So when you have these massive levels that just keep holding, now we're not really going to look at it that way anymore. We're modernizing things. So well, the reason I'm showing this one is just to show you how people will often ask, how long do you leave an order block on? And you really leave it on until it's absolutely worthless, all right? So you see it holds a few times and then it finally breaks, okay? So you leave it on until it's no longer relevant. But it's no longer a order block after the first time it's hit. It can become now support or resistance. So keeping that in mind, we're looking at this in the aspect of an order block being a very powerful sort of generator of market structure, whether that be support resistance, fair value gaps, things of this nature. They generally tend to create these things, all right? So we have price moving upwards here. We're in bullish market structure. We have a pullback, and then price aggressively moves, leaving a fair value gap and breaking structure. So we get a break of structure, aggression, fair value gap. We're going to mark out the last down candle, and that becomes our bullish order block. And when price comes into it, it responds accordingly. And you see it bounces off it a few times, giving some great trades, and eventually breaks down. So this is the original OG order block. It's what we're going to be mainly concerned with, as well as propulsion blocks, really. The second type here is the NASDAQ now on the 1-hour chart. These work on all time frames, all assets. So this is your classic breaker block, all right? Again, we've got a little push down here, and then all of a sudden we get quite aggressive. Price comes down, takes out this low. So you've got a high, a low, a high, a low. It's a little bit of a dodgy low, but nevertheless you get that break. We do have a fair value gap here. So there's our objectives met. Aggression, take a low out, and also leave a fair value gap. Price comes back in, reacts accordingly, but then it breaks above it, retests it, moves out, retests it, and moves out. So this is a breaker block, all right? A breaker block that is originally a bearish order block, which then turns into a bullish breaker block. All right, so that is what the breaker block does. So anytime you do have that, if we move to the first example again, order block, price comes in, hits, 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 and then finally you see it starts to break underneath it, comes back in, tests it as now a breaker block. This one only held once, but it's not the greatest looking order block. Again, it only took out this little low here. So it's not a great order block to begin with because this move really didn't do that much. It didn't take out that much liquidity here, but nonetheless. Okay, moving on to the NASDAQ 1-hour chart. Here we're going to see a propulsion block. All right, so we've got a relatively relaxed move up, a little bit of aggression shown here, and finally price just rips out of the zone here. All right, so what has this propulsion block done here? Instead of having the order block here, which you can actually see if we mark this out, this little order block actually does hold once price visits it, but the first reaction comes off of the propulsion block. All right, so price moves away, and then this candle here that breaks out of this zone is really the candle that moves this up. And again, we break structure, we've got a fair value gap, and we've got aggression. Price then comes back in and moves away. And once again, you leave it on as long as it's working, and then price breaks under, and it pretty much turns it into a breaker block. All right, now breaker blocks are generally found on the original OG style order blocks, the first type we looked at, but you can definitely find them on propulsion blocks and other ones as well. But then we move on to the vacuum block. Now, I personally don't look at these as vacuum blocks. I just treat these as fair value gaps, like I said earlier. So we have the daily chart here on the S&P 500 E-mini futures. Price opens up with a big gap up. So this is our vacuum block. All right, but it's really a price value gap. This is very common. People who like to trade certain aspects of the market will sometimes kind of mingle ideas. So this is what the vacuum block looks like. And you can see price hits it and moves away. And hits it again and again, and then finally sort of comes underneath it. And here we are, today's price. But so that is the vacuum block. It is based on a gap in price. So you'll see a black sort of zone there where nothing happens. Very common in things that don't trade 24 hours a day, 7 days a week. And then finally here we have what is called the rejection block. So the rejection block, it can look quite a bit different, but what it really needs to do is price needs to come into a zone and it needs to find a reaction to that zone. Okay, so it could be a low. In this case, we've got a order block here, more of a pivot actually. All right, so we see that is as a pivot, and we also have right here a fair value gap. All right, so as price comes into the fair value gap, it responds to it and moves away. So we look at just the wicks of these candles, and this is our rejection block. All right, you can see price comes into it quite nicely and then moves away. So personally, I look at these as lows, and for people in our Discord, they know what I call these. So I don't really look at them as order blocks, but they are order blocks in some schools of order block theory. So those are the types. Now, there are quite a few different ways to draw these out, all right? There's not sort of a specific must-do sort of system here. So you will see that a lot of traders will come up with their own sort of styles on how to do these things, all right? So let's say, for example, let us find an example here real quick. You have a very strong move. Price then starts to consolidate, all right? What the order block is going to be is this huge zone here where they'll just paint this whole thing, this whole move up until you get that first pullback candle. All right, so all the way to the top of it, which oftentimes will give you some sort of reaction, all right? But what we're really focused on here are these the low guys, the low hanging fruit, which are going to give you the best risk reward ratio. And you can see there is your order block right there. Right, create fair value gaps. We break several highs on the move up, and then price comes right back into that order block perfectly, tests the low pretty much to the dollar, and then moves away quite aggressively. So there are different ways to mark them out. I don't mark mine out exactly like this. This is the standardized way that most people do. I just change it up a little bit, and it just comes from experience and understanding how to come up with your own sort of ideas of how to mark this stuff out. All right, not hugely teachable, but that's really it. So let's take a look now how we can incorporate this into our lessons so far. All right, so the first thing again we're going to have to do is zoom out, make sure we understand where we are in space and time and that we're putting in some sort of bullish market structure. All right, we'll start off here, for example. So again, if we want to be safe and happy, we're going to take a fib pull here, and we are going to look for our point of equilibrium, which is going to determine exactly where we fall into a discount price. So if we're looking for longs here, we've come down, put in a correction, but we are in bullish market structure. We've got higher low. We've now started putting in bullish internal structure, taking out internal highs after a corrective move. So we can start to think about looking for long positions here. So anything below this zone here is very exciting for us, all right? So we will come down and try to find any order blocks. This is really our first order block here because it comes up and it does break some structure here. This never quite does, although you could consider this price value gap's a little bit interesting here. But again, perfect. Look at that. Hits into it and goes down. But this is really where it starts to get a bit interesting, where you take this high out. So now we have a order block here. Okay, there's a fair value gap right there, another fair value gap here. Okay, this fair value gap's already been hit, so it's a mitigated fair value gap. We won't be quite as interested in that. And then we do have another order block right here. As this order block, this order block has also broke structure. So it takes out the previous highs here, gets above this and leaves fair value gaps. So now when price is coming back, we have to choose which of these structures we're going to be looking at. And you can also see that down here we do have a bit of a rejection block, all right? So price came down to sweep these lows, but this low here held it, all right? So here's a rejection block as well we can mark out. Quite big. Okay, so order block, fair value gap, order block. And it actually hits into the fair value gap and continues to move up, all right? So make sure you don't use the same colors for your charting, all right? For example, I do not use boxes for my order blocks. I use a fib template. So that is how I would have it marked out so that I understand. Order block, fair value gap. This is also an order block here. So I would also have that marked out like so. and that would be it. So it's not overly helpful because now you have four zones in here, but we would then watch for reaction, what happens off of these zones. You see this order block gets completely disrespected. There's no reaction to it, and then here you see a very nice reaction, which is a pretty much a bullish engulfing, and then price continues away. And now this order block, once we take it back, then it starts to hold, but it has been completely disrespected here. So, but that would be the angle that we would be looking to take on this trade. All right, so you don't need to trade it just based on the fair value gap and the fact that you're now putting in, bullish candles, but you would look for other confluence factors in here, whether that be EMAs, fibs, whatever that would be. All right, so that is pretty much it. All right, make sure you're in a discount zone. You can definitely look for fair value gaps and order blocks here. They all exist, and you can take these trades. All right, see, order block. You don't have to shy away from them, but you have to remember what your purpose is here, right? So if I was looking to take this trade, I would not be looking to hold this for that long because, again, we're in a very expensive zone. We've got a very nice move down with aggression into an order block. Let me make sure this is an order block. Actually, this is not an order block because it doesn't break structure. All right, so all this pivot does here is give us a nice move to the upside, which really does not break this previous high here. So not a certifiable order block, but this is a cute bit of market structure nonetheless. This fair value gap is also valid. You could look to trade anything out of these zones, but if you're trading these, they are quick in and outs, all right? For the sustained moves, you'd be looking for anything in this zone, all right? Got to be in the discount zone. And then you've got your choices here. Which one is going to hold? You really never know, but you can find reasons to elevate your decision making, all right? So that is it for the order blocks. Really just start practicing, mark out your highs and your lows, figure out where you are premium discount, and then start mapping out everything that is of interest in the market structure below the discount zone. All right, that would be the best exercise you could do for yourself in order to start watching this. All right, and remember, sometimes, for example, here we've got this, we've got a high, a low, and then we put in a high. We haven't really quite done much here, but it did break this low, so this could be your swing high here. Sometimes price isn't always going to come down into discount zones, right? That's just the way it goes. Sometimes price just moves away aggressively. If we look at Bitcoin right now, it is quite aggressive. Really doesn't seem to be stopping, but we will get a pullback eventually. And even if we don't, for example, here you've got a big fair value gap, price comes into it and trades away. Now this is a very, it's a very nice trade, but you would not be looking to ride this to, 85, 100K without taking profits. You would definitely want to be getting some profit out of this relatively quickly and then shoring up that stop loss and protecting yourself, all right? If you had have gotten in off of, let's say, a order block down here, for example, this, that one never hit. This one, all right, price comes down, hits this order block, and then starts going. Well, you might be safe here, and you might want to definitely take profit nonetheless, but you're not going to be overly concerned about, is this going to come down real quick? The same thing has just happened here. We got this pullback in the last few hours here, comes into the fair value gap, and then starts to push up again. So decisions, decisions, decisions. But if you're looking to trade the swings, you really want to get the best price you can to get in there. So it oftentimes pays dividends to just sit on your hands. You don't need to trade. Wait for the ideal setup for you, okay? If it doesn't come to you, don't worry about it. It will. All right, the market has a funny way of making people get either stressed, disappointed, all that sort of stuff. So you really just have to clear that out of your mind. Chill out. Everything's fine. Set up your idea. If your idea doesn't play out, it's no big deal. Why? Because tomorrow's another day and you'll get more ideas. If it's not working on Bitcoin, you might find it on an altcoin. If it's not working on the NASDAQ, you might find it on the Dow Jones or in a stock or anything, maybe gold futures, whatever it is that you're looking at, all right? So that is it. Hope you guys stay safe, be well, and the next installment we're going to be looking at supply and demand, support and resistance, and start tying more levels into this insanity so that we really start to build up a good story of what is going on in this market structure, and where is the safest places to be looking to get in. And then again, we'll keep tying it all in, and that is it. So practice finding these order blocks, the different types of order blocks, and chart away, my friends. All right, thank you. Have a great day, and see you soon.